If you want to know why the market got kicked in the balls today, I have the answer. So sit back, relax, and let's talk about why the stock market is burning down. Wall Street sell-off intensifies with the Dow losing 300 points after Fitch downgrade. You know, with the day we're having and the amount of people who are probably YOLOing into calls, this might be about one letter off from what people are really wanting to call it. Fitch downgrades US long-term rating to AA+ from AAA. So to put that in layman's terms, you have a rating of credit worthiness, and that includes the US government and many other governments and businesses and municipalities and blah, 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 blah. So when it comes to the US government and their credit worthiness, the tippity top of the peak, you are the most reliable government out there. That's AAA. That's where we were. And then Fitch came in and said, well, we're going to move you down a peg. Does this functionally actually do anything? Does this mean that whatever, insurance plans and hedge funds and investors are all going to suddenly start selling this because like the US is no longer the tippity top? No, not really, because AA+ is still, in a relative basis, pretty freaking high. Treasury Secretary Yellen says surprising Fitch downgrade is entirely unwarranted. So basically the Smeagol character of the US government is not happy with what's going on and says, hey, that's not fair. Play by the rules I want you to play by. Treasury Secretary Janet Yellen called Fitch's credit downgrade surprising, considering the nation's strong economic recovery from the Rona period. Well, it had nothing to do with the recovery. Their reasoning, which I'm about to get into, has to get into the almost sad aspect of how our government acts. Yellen touted recent robust U.S. economic numbers and said Treasury securities remain the world's preeminent, safe, and liquid asset. Once again, they weren't arguing that. They were just saying our government. In fact, I wrote down some of their quote. They've lost confidence in the government's fiscal management. JP Morgan CEO Jamie Dimon calls Fitch rating US downgrade ridiculous, but says doesn't really matter. It's honestly the latter point that's I kind of find interesting. They're like, dude, what are you talking about, man? It just doesn't matter. But obviously, it clearly does have a pretty vast impact. I mean, right now, the SPY, as I'm filming this, is down 1.5%. Yesterday, we closed out in the realm of 456 and some change. We're currently trading below 450. So clearly there's some sort of impact. So it's worthwhile to dive into what are they looking at? What was the decisioning? And is this the start of a downturn? Now, before we get into it, I think it's silly to call for doomsday. The market's been ripping since March. It's been over a month and a half. 40 plus trading days, and the market hasn't gone down 1% in a single day. That's a long record. If anything, we were kind of due for a healthy pullback. I'm not calling doomsday, but to think that everything is green and ripping all the time, that's just simply not how the markets work. But anyway, here's Fitch's reasoning. The Fitch analyst behind the US downgrade breaks down the decision and how the country can regain the top rating. According to the analyst and a representative from Fitch, this is a steady deterioration we've seen in key metrics for the US for a number of years. In 2007, general government debt was less than 60%, and now it's 113%, so there's been a clear deterioration. Furthermore, we're experiencing fiscal deficits to rise over the next 3 years, and we expect debt to continue to rise over the next 3 years. Francis said that in addition to the January 6, 2021 insurrection, the rating agency has noted a constant brinksmanship surrounding the debt ceiling among both Republicans and Democrats. That has hindered the US government from coming up with meaningful solutions to deal with growing fiscal issues, particularly around entitlement programs such as Social Security and Medicare. That's pretty sound reasoning. They're looking around and saying, hey, do they really deserve the best credit worthiness rating whenever it comes to budgets and deficits and government shutdowns? There's always just political infighting. If anything, it's more of commentary on the gridlock of politics within the US, kind of the divisive nature that we have between red and blue, left and right, and everything else that we apparently get divided on among these days. Now, I do want you to know that this has happened before. Previously, a different rating agency, the S&P rating agency, actually downgraded the US. It lasted for a little bit. There was a bit of a hit, but then we ended up coming back. So yes, in the very short term, depending on when you're watching this, I'm expecting the bears to feel a little bit more confident, the bears to feel a little bit more lively, a little bit more back to life because they've been getting their skull kicked in lately. Will it last forever? No, I don't think so. I think this is something in the media cycle that we're going to be covering for a day or two. There's going to be some bearishness in the market, and then out of nowhere. Basically, I think the world's going to end up forgetting. So that's what's going on. That's why the market took such a big hit today. I do expect some bearishness to continue, but this is more of a short duration thing. I don't think this is going to have a massive lasting impact on the stock market or really the overall economy. Obviously, if you have any questions, let me know.